Hello everybody, this is Toni Turner and welcome to the market now as of Lucky Friday, November 13th at about 1 p.m. Eastern. Well, Wall Street is gaining so far today as Disney and Cisco's upbeat results brought the focus back to corporate earnings at the end of a volatile trading week, as we saw record surges in coronavirus cases and the increased hopes of a working vaccine. Fingers crossed on that one. And now let's go into three charts that could give us some ideas about anticipating the week to come. As we always do, we're going to look first at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the exchange-traded fund that follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at $356.64. That's about $35.66 on the S&P 500 itself. Now, it made a new all-time closing high, as you all know, back on September 2nd at $357.70, then slipped south down to about 320. Then it rallied back up over the 50-day moving average, which is the green line you see. The red line's the 20-day moving average. Moved back down to a slightly higher, but pretty close to that low at 320. And again, back up to its closing price, or its price you see right now at 356.64. Now, it did gap up right here on November 9th. It did gap up to an all-time intraday high, but it fell immediately right back down into the prior territory. So that really, we can say that day really didn't count. So again, we're trading now at 356.64. Now again, the SPY is trading in a range here between 320 and about 354, 356. 350. Well, we're going to have to cut that one off right here and take it down to about 357. So we've got to see here, we are trading right near these all-time highs. And as you can see here, you can say, well, Toni, that's a double bottom, which it isn't yet. It isn't, and well, technically you could say it is, but double bottoms don't usually form in uptrends. But it could act at this time as a continuation pattern. It'll be interesting to see here if it can break out, if the SPY can break out and return back and close above that old all-time high at about 358. If it can do that and continue higher, then fantastic. We can say we've got this uptrend. This one here remains in place and is continuing higher. If it can't, however, if it does have to come back down here, head back down below the 50-day moving average, which is now trading at $339.75. Perhaps even take a move down here to 320. We don't want it to go below these these lows here, this support level at 320, nor do we want it to move below the 200-day moving average, which is now coming in at 313. So we're really kind of standing on the corner here, deciding which way it's going to go. We do have some important earnings coming out again next week. Walmart's one of them. So this is a really wait and see area. So because of that, please trade wisely and please make sure your protective stops are in. Our next chart here is a chart of the QQQ. As you all know, the Invesco QQQ represents the Nasdaq 100. It's a major index in the market, and the top holdings are the big guys, the big dudes, Apple, Amazon, Google, or Alphabet, I should say, and Facebook. Now, when I captured this chart today, the QQQ was trading at $290.10. It touched a new all-time closing high on September 2nd, as did the SPY. Then, as you know, it fell down pretty darn dramatically below the 50-day, the green line, below that moving average, slid down here to 260, then rallied back up. And rallied back up on October 12th to a lower high at about 298. It fell from that back below the 50-day moving average, but made a higher low here right about at 268, and this was more like 261. So what you can see here with lower highs and higher lows, that means that the QQQ is currently forming a triangle. Now, triangles are typically kind of fun because they usually always break one way or the other, and it can be dramatic. What you always want a triangle to do is you want it to move, either in this case, break out higher, back over this prior high. Obviously, most of us want it to break higher and start a new uptrend here. And we want it to do so, or it could break lower, and we want the breakout to happen about no more than 2/3 of a way into the triangle. So as you can see, this triangle is getting a little old, getting a little long in tooth. We'd like it to break out here sooner than later, because when that happens, the moves are typically stronger. So to remain bullish then, the QQQ has to remain above the 50-day moving average. That's at $279.87. That's always an area of potential support. We also have the trend line coming in here at 270. So in order for the QQQ, or the cubes as we call them, to remain strong, we need it to stay above these two levels, 270, 279. If it breaks down from here, then of course we could see definitely another leg lower. If it moves higher, then fantastic. As you all know, November, December, January are typically the best trading days of the month. So we will have to see what happens. Please keep your stops in place so you're ready for anything. Our final chart today is the daily chart of the Healthcare Select Spider Fund. Select Sector Spider Fund is what I meant to say, symbol XLV. Now the XLV has 63 holdings. Some of the top holdings are Johnson & Johnson, United Health, Pfizer, Merck, and Abbott Labs. And I think considering the vaccines that are coming out in a lot of different companies, actually, you can see where I'm going with this. Now, when I captured this chart today, the XLV was trading at $111.92. It made, now this is trading at its all-time highs right now. This is trading, the XLV is at an all-time highs. Now you can see that, well, let's go over here. Since it sunk down to a low in March of about $73.50, it then rallied pretty dramatically. It definitely made a V-shaped recovery. Of course, you can play the simple line here: humans will always need their medications. So indeed it is, medicine is indeed a staple. So it started moving up higher here, popped above the 50-day moving average and the 200-day moving average. Since then, it's kind of been trading. It's hard to, the 200-day moving average has done a better job than I can here of forming kind of a trend line, albeit not an incredibly straight one, but you get the picture here. So the lows here, it's come up from about 98, 99, just gradually made higher lows. We can see how it came up here in kind of a channel, then leveled off a bit. These lines just keep changing, and then popped up all of a sudden in this past week. And again, popped up real high here and fell back down, just like the S&P and the Nasdaq did. So it is again now trading at $111.92. It has actually broken out. These resistance highs here come in at about 110. So we can say that it finally broke above those resistance highs and now is trading, as you know, at $111.92. Now, if the XLV can remain positive going into the coming week, and if it can stay above the 50-day moving average, which is trading at $106.16, I may add a position of the XLV to my portfolio. I will place my initial stop down here under the 50-day moving average at 106. That's, again, just below the 50-day moving average. Now, when or if the XLV moves up and moves over $115, I may add more shares to my portfolio. I'm going to place my initial stop here at $106, and as you can see, that's right below the 50-day moving average. So you may, keeping all this in mind, you may want to keep an eye on the XLV during the coming week. And now, before we go on to final thoughts, please know that if you'd like to become a more successful trader, this is the perfect time to check out my trader training programs. You will love my simple yet powerful strategies. They're devoted to swing trading, trend trading, bottom fishing, and many, many more. Because these strategies help you increase your gains quickly and easily. And believe me, I strive to make my programs easy to learn. That's the most important thing, because that's how you're secure in your knowledge and you can plan the best. To see all of my online trading programs, simply go to the link on this screen, which is right here, or easily just click on the orange button below. And now, on for final thoughts. Here's something to think about this week. When I am trading, am I aware of my self-talk? When I am trading, are you aware of your self-talk? Okay, so listen up here. The average person thinks about 50,000 thoughts every day. And further, every time we think one of those 50,000 thoughts, our brain actually produces chemicals that can trigger reactions felt throughout the body. And if you don't believe me, listen to these words. You're going to be audited by the IRS. Can't you feel your insides tighten up? It means there is a substantial relationship between what you think and how you feel, both physically and emotionally. So just as we are always breathing, we are always thinking. And just as we don't pay any attention to our breath, we don't pay attention to our thoughts. So we don't realize how much our thoughts dictate and direct how we feel every hour of every day. Now, obviously, we cannot track every single thought we think during the day to see if it has a positive or negative effect on our emotional state. But you should know that the thoughts that are most influential are those where you mentally talk to yourself. We all have an internal voice inside our head that affects our perception of the world around us. And you know this already. We may tell ourselves to keep quiet, or congratulate ourselves on a job well done, or even reprimand ourselves for making a poor decision. So what this leads to is when we are trading, we need to maintain a calm, confident, and positive mindset. Calm, confident, and positive mindset. That's because negative self-talk damages our ability to think properly and to make good trading and investing decisions. Negative self-talk is self-defeating. Please know that. It is self-defeating. And you can color your perception of the market with a gray haze that is unrealistic and can cause you unnecessary actions. You can do that with negative self-talk. So, for the next 5 trading days, check in with your thoughts when you are trading. Now and then, just stop cold and say, what am I thinking? Check in with your thoughts. Are your thoughts generally positive, or are you beating yourself up? Are you saying, you dummy, you shouldn't have gotten out there, you shouldn't have done this, you shouldn't have done that? That is not going to help you be a successful trader. If you are thinking negative thoughts, please replace them with a thought statement such as, I am a calm and confident trader, and I see the market as a place of opportunities. And if you want, type that out, print it out, and stick it on the side of your monitor. I love statements like that, and they remind you to come back to center. I am a calm and confident trader, and I see the market as a place of opportunities. When you do that, it evokes positive feelings and constructive thought patterns that lead to much better trading decisions. Finally, if you want to become a consistently winning trader, check out our easy-to-learn yet powerful online trading programs that will help you increase your trading profits from now on. From swing trading to bottom fishing, trend trading, and more, just click on the button below for more information. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.